Hi, this is Joel, and I'm going to walk you through my playbook trade from December 26, 2018. Big picture, the market um, made new lows again. Uh, Looking at the SPY here on Christmas Eve, and a bounce could really be coming anytime. Um, Ticker specific information. Um, Basically, Micron or MU announced earnings on the 18th. They beat on earnings per share but missed on revenue. And basically, ever since then, this thing's continued its downtrend um, till today. Basically, this is the fifth day in a row I've tried to trade this stock. Uh, okay, so some fundamentals. Um, or I really want to focus on the trade variables here. So what basically this trade is on the open, the price flushes through the key level support you're looking at, finds support at the next level, and just kind of comes up pretty quickly to test that support that it flushed through, where you would short into that. So some variables are an established technical level, an overall weak stock, the more the better. So negative catalyst, it's in a downtrend, it's been weak since the catalyst, and then the market is weak at the same time, which it wasn't today. Um, so, and also low resistance uh, failure of the level on the open. So like it's not like it bounces there or hangs out there and consolidates and then fails, but like just slices through and then comes back up for a quick um, retest of the level on lowerish volume. Technical analysis, you can see MU here. It's just been in a long-term downtrend since June. Um, this is from Christmas Eve. You can see flush through 30 on the open, came up and retested, came back down, and kind of kind of closed down at 29, got below it in after hours trading, was hanging out there. Now is kind of drifting above it, and then even drifting above this 29.20 level. So here's the actual trade. I forgot to start recording this morning, so like I started recording after I was already in this trade. So you can see I got in about 29 and got a nice little bounce. I mean, it would be a good size scalp, I guess you would say. Um, at one point, I think it was maybe like a 10 or 12 cent scalp, and now in here, it's bouncing up over this level. Now is where I should have just, in retrospect, um, just hit out of the trade and waited to see if I thought it was going to fail again because it's just hovering out there. I mean, it's you could say it's bound to try to come up and test things again. I mean, maybe hindsight's 2020, um, but you can see here I'll get stopped out shortly. Um, in retrospect, what I would have done is when I was in the money by 10 cents, I would have just moved my stop down, knowing that it's on the open. It's only marked open for 10 minutes, and I don't know if it's going to chop up through there or not. So I might as well take my 8 or 10 cents of profit and wait again for maybe to hear. So watch, it's going to come up. Oh, I'm stopped out. But then watch, okay, it comes right back down. Sellers step up, you can see, and watch, it basically doesn't look back from there, and it just flushes down for that 30-ish cent move that I would have hoped. And if I had waited a while longer, this thing actually gets down to 28.50, and then later in the day, I mean, just keeps trending up and finishes up right above about where the 30 level is again. But here it goes. So frustrating because that's what I was playing for, and it got stopped out by 1 cent. But when you have stuff like that happen, it's a good, um, you got to adjust your strategy and look at it and ask yourself, is that the best strategy here? Could I have really expected it was just going to do that? And when I got in there and was getting that nice bounce, should have adjusted my stop down and waited to see, if it was likely going to try to test it again. Um, in looking at it, it's kind of hard to think that it's going to come up, it's going to just touch it one time, and it's going to go straight back down, especially after it bounced like it did from 28.50. So the next time I would do this trade, I would definitely try to aggressively move my stop down, on the off chance that it did flush straight down through there. Um, and then also just view that as kind of paying for the trade and just wait for it to come back up and test it again. And if I thought at that point it looked weak, get back in again. And this isn't meant to be like a giant move or anything, but, um, certainly would have made me you know, if I just held off there, 30 something cents a share, which isn't bad. Um, so just part of this process is just trying to collect all the variables and think about how would you do it differently the next time. So trade management, we just kind of talked about it, but got in here, limit order for 28.99. My stop loss, I just put 8 cents above. I can't really think why I put it 8 cents above. Maybe just by looking at some of these other wicks, it seemed like a good amount, a good place to put it. I guess maybe I should have put it over 10 or 11, but I don't want to get in a habit of just giving bigger stops than I think is necessary. But as I said before, this was a trade to be aggressive with the stops, just to try to, capture those little moves, um, knowing that it could just chop up at any moment before actually doing the move that you're trying to hit. Um, so that's what I would do here. Now, other trades on the open, I would argue, and what I've seen is you wouldn't want to be so aggressive. Like, let's just say this same trade happened and it shot up on the open through like this 29.20 level right here. It shot up through there. It was way overextended. It got up to 29.90 and it was way overextended and it was near this level that it couldn't trade above yesterday. Then I would get short there and put my stop over 30 and sit on my hands and let it wait because I would be thinking, man, it's unlikely that it's going to get that overextended and get itself over this level. I could be wrong, but that's kind of what I've seen, and at least the way I'm going to be playing it is um, that's where I would sit on my hands versus trying to aggressively follow the price down with my stop. So some things I did well. I had a good game plan, obviously, for identifying that level, and I picked a trade that ended up working. Just didn't, the execution didn't go my way this time. I was patient for it to come back up there once I kind of missed the first move. Um, and also patience for trying for the move to work out, even though now when thinking about it, like I've been saying, I should have moved my stop down. Um, I at least sat there and let it try to work out, even though I was in the money on the trade, which I don't normally do and has really bit me this past week. I've missed out on so many moves, especially on the market where I get buy the SPY down at like near the low level of the day, uh, and get, some paltry, 10-cent per share gain when the thing is on its way to bouncing $4. And I just look at it and it's like, you need to take a step back, look at the situation and ask yourself, is this a time to really be scalping, or is this something that has the possibility to make a bigger move? And that's where, again, making these playbook trades and talking through it, trying to just implicitly get in my brain, what I would do in certain situations, and also, explicitly write this stuff down and have a better formed plan before getting into these trades. But in any case, for what I was trying to do today, it was good that I was able to let it work out, even though I got stopped out. And areas of improvement, just being more specific with setups and come up with procedures for taking profits depending on the setup. So, like I said, those two examples I just gave, about where I would be aggressive or where I would just kind of let it go. I need to identify that stuff, write it down, and follow that and see how well that works versus just kind of in the moment thinking, oh, should I let it run or should I not? Um, so that's something that this taught me today. So thank you for listening, and that was my playbook trade for December 26, 2018.